Hey everyone, welcome to the Your Money Your Life podcast. We're on episode 296 of the pod. Make sure wherever you're listening, you like, subscribe, 5-star rate, and review this podcast. We do this every week. We do this even when the government shut down. The government shut down, but we're still working. How does that work? Also, someone had a good question on my TikTok. If they're shut down and some essential services are may not be happening, do we still pay taxes? Is it prorated? We want to know those answers. They've been shut down for 2 or 3 days now, depending on when you're listening to this. We'll see if something happens in the future to eliminate the shutdown. The reasons for the shutdown, good question. I don't know too much into the logistics of how this all works. I know that we need funding and we need a bill to be passed to provide funding to allow the government to keep going. But that's all for the legislators to figure it out and for us to hopefully get figured out. So let's move into this podcast this week. We have a lot to talk about as far as what's going on. The government shutdown will be some of the talking points as it relates to finances and your finances. But first and foremost, let's dive into the market update. The market update is where we want to start, and we'll get into that. I actually didn't even bring up our chart this week. We have our chart. Let's see what the market is doing so far this past week and kind of take a zoomed out view of the year, the month, all those different things. We're looking at an SPY S&P 500 ETF from iShares Spider. So let's look at it. Right now, for the past 5 days, we're up about 1.36%. Not about, we exactly up 1.36% before the market opens because we are recording early because I have some work travel to do. For the past month, over 3%. 6 months, we're almost hitting 28% increase in the overall market. Year to date, up 13%. Remember, April, people were trying to start calling for the end of the world in April, but we knew it wasn't over. We're still breathing air, still breathing oxygen. The market's still rising. That won't always be the case, but it is 80 to 85% of the time. People forget that. They only remember the 10 to 15% of the time when it's not. It's kind of like that "what have you done for me lately" type of thing, or that people talk about. But in general, again, we're seeing the market continue to plug along. There are some headwinds, different things that may come about, and we'll talk about those here in a bit. But that's the general consensus. Like the market is plugging along. The government shutdown, and let's read from CNBC. The government shutdown began after top Democrats and Republicans failed Tuesday to meet the deadline to agree on a deal that would keep the government funded. Lawmakers blamed each other for the stoppage as Democrats stayed firm on their demands to use the measure to extend healthcare tax credits for millions of Americans. Now, the biggest question for investors is how long the current stalemate will last. It is likely to drag on for at least 3 days, with the Senate set to be out of session for Thursday in observance of Yom Kippur, making Friday the next day. Senators would be expected to vote again. This is reported by NBC News. Our prediction markets, traders are betting that the shutdown could drag on for nearly 2 weeks. I'm actually curious what the longest shutdown was. I remember there was, one a few years back that was quite long. So that's that. I think they're getting to that now. My belief is that the shutdown could last even longer than in 2018, but that other factors will ultimately matter more, such as upcoming Q3 earnings being solid and AI euphoria continuing, with the Mag 7 reporting solid quarters. So they're relating to the markets, which is what we want to relate it to. Is that going to affect the markets? Most people are saying not really. You have upcoming Q3 earnings, AI euphoria still plugging around for Mag 7 or any AI infused or AI led companies. And so, and also the Fed is supposed to stay its course to cut rates 3 times this year. So in the near term, people are saying this doesn't really hurt the market, the government shutdown. And the stock market has historically not been much affected by government shutdowns, but investors are paying closer attention to this one, given the more volatile policy and macroeconomic backdrop. Elevated market valuations and concentrated levels amid the AI led rally and ongoing inflation concerns. So people are paying more attention because there's some other things lingering around that are not just shutdown related that could have a little bit of more effect on the markets as well. So that's the big news on the government shutdown. The latest update, it was shut down Wednesday morning, setting the stage for furlough of hundreds of thousands of workers, federal workers, which again is the sad and bad part of this. You got hundreds of thousands of federal workers furloughed and the shuttering of a slew of key programs and services. And this is again reported by CNBC. The fall Democrats led by Senator Chuck Schumer and Representative Hakeem Jeffries demand that any stopgap funding measure include an extension of enhanced Obamacare tax credits. So we're getting pretty into the weeds of what's going on politically here, but there's also an economic data blackout during the shutdown of this week. That's also top of mind. I talked about this on my TikTok, the economic data blackout. They're not going to report some of the jobs numbers, some of the all these numbers that we need that the market uses that fuels uses to fuel their decision making. The Fed uses to fuel their decision making are not going to be reported during the shutdown. That's kind of crucial. That's an interesting fact to know. The Federal Reserve is expected to announce, of course, we talked about the interest rate cuts as well. Um, so yeah, there's a lot with the shutdown. I mean, it may not impact people directly if you're not obviously a federal worker or any of those things, but there is a lot here. And again, the data blackout, especially from the market standpoint, the financial standpoint, economic standpoint, is huge. So we'll keep our eye on it. Again, the markets this morning, futures were pointing up. So again, the market so far seemingly unfazed, but we'll keep our eyes on that. Let's dive into more news and news of the day. AI isn't taking jobs. A study found that AI isn't taking jobs. Artificial intelligence tools are not putting people out of work. A new academic study finds, despite widespread discussion of AI apocalypse in the labor market, researchers from Yale's Budget Lab and the Brookings Institution say that they discovered no evidence of any discernible disruption to jobs since the release of ChatGPT in November 2022. Technology has historically upended workplaces over decades rather than months, the report notes. Yeah, I mean, that's what I was going to get to. I mean, yeah, 2, 3 years, no, but if 5, 10, 15 years, 100%. It'll make some people busier. Like people are saying they make top level busier and then others not. And also people are saying younger people are finding it hard to find jobs. That can't be mistaken. Of course, it could be the economic backdrop play a part, but it might AI definitely has a part in that, right? Like some of the administrative roles that a younger person would do that has no career experience is definitely going to be eaten up by AI. They're showing there was another study that counteracted this and said that, higher level people were getting more jobs or increases or whatever, but they were cutting junior roles. So yeah, this is definitely skewed. And so even it's preventing hiring. Like preventing hiring is kind of the same thing as taking those jobs in my mind. So definitely something to keep our eyes on. Speaking of jobs, private payrolls sank in September. So ADP releases a report about private payrolls and because they have a lot of look into payroll processing, of course, the payroll processing company. Private payrolls dropped by 32,000 in September as momentum across the labor market continues to slow. ADP said Wednesday that recent downward revisions by the federal government to benchmark data had contributed to much of the drop. Even without the recount, however, payrolls growth last month was still slight. The payrolls processor said wage growth for those who changed jobs also declined to an annual 6.6%, the lowest in a year. The Labor Department's non-farm payrolls report for September, meanwhile, will be delayed due to the government shutdown. So they're saying 80 people out there report that's a public company said, hey, payrolls dropped last month. And you can't compare that with the government data, as I was saying on my TikTok, because again, government data won't be released, at least as far as we know it, with the shutdown. But that's kind of interesting to know. The U.S. shed 32,000 private sector jobs in September. The payroll processing giant ADP did say this. That is down from the revised loss of 3,000 in August. So they revised August number and it was down 3,000. So that is clear to me that the labor market's tightening. That is clear to me, that the labor market's tightening. Very, very clear. Um, you know, I think you're seeing that, without any equivocation right now. So that's big news to understand if you're a job seeker, job looking. Just keep your eyes open because again, things are tight. If you're new coming to the market, just finished graduating, that's tougher. That's really tougher. It's hard to say what to do there. Maybe try to start something, a side business, something that you're passionate about. Build experience that way, and still apply. It's tough moving out there. Amazon though is unveiling discount groceries. With Americans seeking bargains amid stubborn inflation, Amazon on Wednesday debuted a line of private label groceries priced largely under $5. Amazon Grocery will combine the Amazon Fresh and Happy Meal brands and be available online at Amazon Fresh stores. The line of over 1,000 items will include not just pantry staples, but fresh foods such as meat, seafood, and dairy. Amazon touts the service is price conscious. Shoppers in an environment that has seen house brands from the likes of Kroger, and Walmart gain market share. So Amazon say, hey, we're not just going to be Whole Foods and high price stuff. We're going to also get into the discount. While people are looking for discounts, looking for cheaper products, foods, we're going to help them out. And that's what Amazon's doing here with this Amazon grocery, largely under $5, $5 a unit. That's not bad, right? Price conscious brand. I actually like this move from Amazon. Amazon is just, if you think about Amazon, man, they're just coming to take over everything. How convenient is it to order your groceries? Blythe and I were going, but now we just like, okay, we can order our groceries. And so hopefully we don't get to stuck in the cycle where we just order everything. But if you think about the convenience of our lives now with ordering, it's just made it too convenient, right? And Amazon plays a large role now. You could order anything from there. Amazon, then you got Amazon Grocery, Whole Foods, anything to your doorstep in a matter of very short time is kind of reason why I'm very bullish on the company. Have been for decades. It's got to be in a, it was one of probably my first stock I bought was Amazon. And I would say that was what, 10 some years ago? What, wait, no, more than 10 years ago. Yeah, so it's been over a decade. So that's a good thing to know. Good thing to know about Amazon and what they're planning to do. We touched on the government shutdown. Berkshire Hathaway, I wanted to touch on this story. Berkshire Hathaway is going to buy Occidental OxyChem for 9.7 billion in Buffett's largest deal in 3 years. So Warren Buffett's making a big play, getting Occidental Petroleum unit OxyChem for 9.7 billion in cash. The deal marks, oh damn, he just said straight cash. 9.7 billion in straight cash, homie. The deal marks Berkshire's largest since 2022 when it paid 11.6 billion to insure Allegheny. It also comes at a time when the conglomerate is sitting on 344 billion in cash. That makes sense why he went straight cash, homie. Shares of Occidental rose 1.3% in pre-market trading. So Berkshire is okay. Like Warren's great at what he does. He obviously knows these business lines very well. He's kind of the only person still, he was not anti-tech, but he wasn't really doing the Mag 7 and the Fab, whatever other great names we've had for the big tech companies. He was more focused on old businesses that he felt like he knew well: insurance, oil, logistics, different things, transportation. He's old school. He just started investing in Apple, was it 2016, 2018? Right? So that's huge news. If he's doing this, there's got to be a reason. We know that he knows these businesses really well, and he's taking some of that cash pile and putting it into work and buying a business that he believes is undervalued. So we'll see how that plays out. Probably pretty well. Probably pretty well. Any other news of the day? We've talked about the Fed electric vehicles. I saw this electric vehicle sales to hit a record this quarter as tax credits nears end. So EV sales are expected to reach 410,000 units in this quarter. That's up more than 20% from Q3 2024, according to new estimates from Cox Automotive. This means that EVs will make up a record share of the new car market at sales. Of the new car market at 10% of sales. The reason is plain. Would EV buyers are pulling forward purchases in order to take advantage of the federal $7,500 tax credit, which ends today. What does this mean for the biggest EV maker in the U.S., Tesla? Cox is bearish. The company estimated that Tesla would see its third quarter U.S. sales decline 6% year over year. So again, pretty much there's a tax credit that was put in with the prior administration, or actually the one prior to that, I think it was the Obama administration. They're putting these tax credits. And now they're ending and they're not being re-upped. And so a lot of people are buying into EVs now um, to take advantage of the tax credit, the $7,500 tax credit. And it just makes sense. If you have new homes or any of those things, you are able to plug in your car, electric vehicle in your home and just charge that way. I haven't been to a gas station. We have an EV. I haven't been to a gas station. Plug it in. We're all set. We're all set. But Tesla stock is actually ripping. It's on track for its best month since the presidential election, as Elon Musk has refocused his time into Tesla rather than Doge or any of the government stuff he was doing. He's refocused, and the stock is doing well. So that's just interesting to know about actually about EVs. And what are your thoughts? Are you an EV person or not? Does it matter? It's great. I think it makes the actual maintenance much better, folks. Let's talk about a couple things. The market itself, kind of the phases of the market, because people seem to forget what that means, right? And so we have this handy dandy chart that we'll bring over once I get a chance to bring it over. And we'll talk about the phases of the market. The phases of the market. So, we did have the Bitcoin phase where Bitcoin prices increased. We've always told people to hold those assets. It's more volatile, smaller percentage of your portfolio, but hold them. Then, you'll see people say, oh, wait, what about other cryptocurrencies? And you'll see Ethereum, people would jump into that. Ethereum's done well. And then you'll see money trickle into the large caps being the Mag Sevens, the bigger companies, the tech companies that are doing well. And then you'll see alternatives. That could be alternative coins, that could be alternative stocks, that could be small cap stocks, things that are way more volatile, but people feel the euphoria and they start investing into anything. Where do you think we are at this phase, folks? Where do you think we are at this phase? That's a good question to ponder if you think about it. I think we're in between, two and three somewhere potentially. The market still has room to move so far, and it's been plugging along. We are getting to the point where we will see some cool off at some point, but we're not there yet. And that's coming. That is certainly coming. But we just don't know exactly when, and that's part of the fun of investing. Let's go into a couple questions. So we did our roundtable and questions, but I had some really good questions, so I wanted to get into it. How many years has a typical American homeowner been in their current home? How many years has a typical American homeowner been in their current home? I'm going to say 10 to 15. I was really good last week with my guessing. Hopefully I'm on the same path. I'm going to say 10 to 15. Wow, we're at it again. Answer 11.8 years. And homeownership part is homeownership still part of the American dream, or are people moving on faster than ever? The answer to that question is 11.8 years. Um, That's down from the peak of 2020, which was more than 13.4 years. This is a Redfin study that shows this. So, all right, so people have made some moves. But let's get into the next question. If a meal costs $37 at a restaurant, how much would you pay to get it delivered with DoorDash? So they're just looking at DoorDash's economics. As someone who likes ordering, I don't use DoorDash unless. In fact, I have a gripe with DoorDash. My wife and I, everyone has a gripe. If you search online, if you don't even sign up, or if you did sign up for DoorDash Pass and then you cancel it, they just keep charging you forever. For years, even like you can't get rid of it. Is there anyone else that feels that have tried to get rid of it? DoorDash is doing something that I feel is an issue. It should be looked into because you just can't cancel. You just can't. Maybe it was a scam. We don't even know, but we did figure out a way. But if you're feeling that out there, let me know because I think it's crazy. So I have a gripe with DoorDash, but I don't use them. But let's figure out what the economics would be. To get delivered, you got to have a service fee of like $5 to $6, let's say. So we'll go to 43. You're gonna have tax something a few dollars. So go to 47. You're gonna have another miscellaneous fee. So I think you'd pay at least 50. Uh, uh, 26 more dollars. Okay, on average, a 71% markup. Interesting. Cool. Oh, tip. I forgot tip. Yeah, tip. Yeah, this is marked up, folks. It's gonna be marked up. $26 more you'd pay. $26 more to get it. So not bad. Okay, we're close. We're close there. Last question, because I love these questions. Which credit score band has the highest percentage of people? 700 to 749, 750 to 799, or 800 to 850? I'm gonna say 750. I'm gonna say 750 to 799. Oh, 800 to 850. I actually knew this answer. I don't know why I got this wrong. With 24% of people in that range. Okay, we're in the 800 to 850 range. 24 to 8% of people. That's good. Okay, that's good. That's good to hear. Folks, we just did another episode of the Your Money Life podcast. Make sure you like, subscribe, 5-star rate review. Follow me on all socials. At TikTok, we're doing daily posts talking about the market. personal finance tips. Follow that, share that with family and friends. We do this every week, and we'll talk to you next week.